All right. Just got back from the Bitcoin conference 2025. Was a good event. Exhausting, but really good networking opportunity and some cool stuff. And so, what I did is I shared in advance the sessions and speakers that caught my attention. And what I'm going to do now is share a recap of some of the takeaways. So there were 35,000 attendees at the Bitcoin conference this year, the largest attendance yet to date. There were over 400 speakers and several hundred sponsors or booths that were there. And there were actually 5,000 corporate attendees or corporations that were there as well. So it had quite a mix of old school traditional Bitcoiners. You had institutions. You had politicians, J.D. Vance. You had senators. So there's quite a mix of individuals that were there, which made it interesting and exciting. So rather than you spending 48 hours or trying to sift through 400 different speakers, I'm going to share my takeaways, right? So hopefully this provides a similar level of value, but it's going to be much more condensed and action-packed for you as well. So what I'll start with, actually, so my experience there, so I went and attended the Bitcoin Sports Network golf outing on that Monday before the event. So I was actually on Labor Day. I'm going to show this. I think I showed this last time in the prep session, but I'll just give a quick look here. So this is the Samara golf outing that was hosted by the Bitcoin Sports Network. It was an awesome time. One of my brand here, Hodl 21, we sponsored. We were one of the sponsors at the event. Is at Bally High, which is a really cool course right on the strip, and just an all around fun time. And you can see they give out some cool looking awards and stuff. So that was Monday. Tuesday was the institutional day. I did not attend that, so we're going to get right into the main stuff of the event. And I'm going to start with one of the first sessions I really took a bunch of notes for. And that was the session with Ben Cowen, who I think is a really great resource when it comes to looking at technical analysis. And he got like a standing ovation and all that kind of stuff just because everybody loves him. So anyway, Matt Crosby with Bitcoin Magazine there, Chris Kuiper, and then Ben Cowen here. He's worth checking out. Here's his YouTube channel. He's got 900,000 subscribers. I would recommend checking him out. But anyway, so for this one, what I really like that Ben said is he said, don't assume this cycle will be different. There's a lot of people talking about a super cycle and all that kind of stuff. I'm of the same mindset until it's proven that it's not. It is a super cycle. I'm assuming that it's not, right? So this cycle isn't any different. Be objective and follow the data. There's going to be a lot of emotions. There's going to be FOMO. Just follow the data, and that's what he's big on. So he also said, and I agree with this as well, this is the biggest, and I think this was actually Chris who said this, this is the biggest delta between institutions and retail sentiment ever, okay? So we have seen that obviously when it comes to institutions, we're seeing the adoption by BlackRock, the ETFs. We're seeing adoption by states. We're seeing the adoption by governments. Retail's not here. They just completely disappeared. Even the people I talk to, it's just not of interest. It's not on their radar. And this is the biggest disconnect ever. I mean, if you look at this, let's see here. Past 5 years. Let's go to this data. I mean, look at this. Just dropping off. Since Trump got into office, you can see it has just been this steady trend downward. This is Google Trends. How much people are looking at this. I mean, look at this. These numbers aren't even that different than when this was technically dead and Bitcoin was like at $15,000-$16,000. I mean, that just tells you what's going on right now. Retail is out, institutions are in. This is your final run at front running institutions because they're going to be here for good. We still have time to front run them. That was one of the big takeaways. Here's the thing. Another statement. Institutions don't feel it's necessary quite yet, so we can still front run them. They still see it as somewhat speculative, but the numbers they're looking at are looking attractive. People are using language that they're used to, like Sharpe ratios and all of that. That is what's making institutions more comfortable. They're comparing this asset class to others and using the same language and getting more and more comfortable, right? I love the line, all models are wrong and some are useful. Just saying, hey, things are going to change, things are going to evolve. It's just what's going to happen, right? So the main takeaway in this one is crucial. The main takeaway from it is that this cycle is going to take longer than it has in the past, okay? Which is starting to make me slightly pivot away from. So I put out the prediction following the 4-year cycle, we should see 265K around October, November of 2025. I haven't fully pivoted, but I'm starting to grow open to the idea that this cycle might be out there further. And in doing so, I believe we could be looking at into 2026 through maybe Q2, maybe even crazy thing. It's the first time I'm saying maybe even Q3. One thing I haven't made a video on yet, but I likely will, is that the Federal Reserve is made up of 12 members. And of those 12, 2 of them are pro-Trump. The other 10 are anti-Trump. What's going to happen is 5 of those seats will come up for assignment or election in Q1 of 2026. Now, since the president elects those individuals, those 5 will likely be, right, pro-Trump. So now we're going to go from, and those other 2 that like him are already in there. So we're going to have a majority. We're going to go from 2 out of the 12 to 7 of the 12 in favor. And then their first meeting will be March of 2026. And I could see them really printing a lot of cash, which will then drive this cycle further. So I'm starting to pivot and agree that the main takeaway is the cycle is going to take longer than it has in the past. Okay. So there's a good one. All right. The next one I checked out was the FIRE movement. It was all right. It was fine. I didn't agree with some of the stuff that was mentioned in there, but that's okay. That's what we're all here for. So anyway, so for this one, the big thing, here's my notes. Welcome to Bitcoin. It's already in your index fund. So a lot of the FIRE movement is big on index funds. Well, more and more of these corporations are going to find themselves in the Fortune 500. People are buying the S&P 500. They're buying the NASDAQ, Triple Q, which is going to force them into these things anyway. There's just a lot of like energy that I didn't feel was productive in this meeting, to be honest. Don't retire early, you're a consumer. They were anti-FIRE in an aggressive way. They just didn't like the word retirement. It's like, guys, you can be financially independent and then create businesses and do things that you can enjoy. That's fine. This was a conflict of almost rhetoric. I didn't think landed the best. One thing they said is MSTY will trend down over time, and selling Bitcoin as an income stream through the sale on capital gains. This one was kind of all across the board. I don't think you missed much on that one. There was no real consensus, no clear message that was put out there. Arthur Hayes, great stuff. If you were to, I would check out, because a lot of these were recorded, I would check out Arthur Hayes for sure. I haven't looked it up. Let's see if we can find these here. I'm just going to go to YouTube, and then I'm going to type in Arthur Hayes Bitcoin Conference 2025. Yeah, I went to one of his after parties. That was fun. The math behind 1 million Bitcoin. Arthur Hayes 2025, 3 days ago. Okay, so what I'll do is I would check this one out. Okay, this one, it's 15 minutes. I would recommend checking that one out. Okay, so he made his point was pretty fascinating. I found he said that money printing will be different this time around. Okay, and I'll elaborate on that a little bit. So he made the point that one of the biggest money printing events ever was out of the pandemic 2020, and then also a big print in 2022. He's making the argument that the upcoming money printing event will dwarf 2020 and 2022, which is one of the reasons that it's going to bring Bitcoin skyrocketing upwards. Okay, his biggest thing is that you can't cut debt meaningfully. We've seen Elon Musk and Doge try to do that. And also it isn't good politics, okay? So what they need to do is they need to switch to growth, okay? Economy is dictated by credit, so you can make it perform to any number that you want simply by providing more credit. I found that to be interesting, okay? They tried pulling the savings lever, didn't make sense, and now they're trying to pull the growth lever. And they have full control of that. It will inflate assets, it'll inflate everything, and Bitcoin will go up dramatically. But he's saying that's kind of the last lever they have to pull. The main problem is inflation. It is necessary for the government to afford the debt pile. Yeah, we're kind of kicking the can and causing bigger issues. Let's see. Freddie Mac and other things. $4 trillion 2020 spend was 10x. Expect. Oh, this one was interesting too. There was $4 trillion in debt created, or I should say $4 trillion printed recently since 2020, right? And what we've seen is that the price has gone up, was 10x, okay, over that period of time, is what he's arguing. And so he expects the next money print to be $9 trillion, so over double. So simply put, if we get another 10x, he's not even extrapolating further. And I don't know if we did a 10x between 2020, but anyway, it went up quite a bit. Let's say it went up 5x. What he's saying is he can expect it to go up 10x because we're going to print $9 trillion is what he's projecting, which would cause a 10x from 100. That's $1 million easy, right? Take a look at his. That one was pretty interesting. Then there's the tax strategies one. There was one or two nuggets out of there that I think was worth it. You didn't need to sit through the whole thing, but I think it was worth it. Let's see here. Maximize your Bitcoin tax advantage strategies. So here was my takeaway on this one, is that they were big on harvesting losses, where, and double check this one, this was news to me, is that because it's crypto and it's not a stock, what you can do is, let's say you buy at 100, it dropped to 80, right? They say that you could then sell at a loss, okay? So you have a loss, let's say, let's just make it easy, it's 100 grand in. You sell at a loss, okay, at 80, so you get the 20 grand write-off, but then you buy back, but you can buy that back in at 80, okay, which is kind of fascinating, because usually with stocks you have to wait 30 days. What they're saying is there is no waiting period. You can do this real time. That's pretty wild if that's true and accurate, so double check that. That was the one nugget I walked away with. I was like, okay, this could be pretty interesting. Okay. At the institutional level, this was a different session. We're still early. Oh, somebody made the point that even corporations are asking basic questions that you would have gotten 10 years ago. So they're saying, hey, we're still early. So there you go. That's a little nugget I wrote down. So bit bonds. Is somebody was talking about the volatility with Bitcoin, but it's only volatile because it's measured in dollars, which I agree with, right? Dollars are quite volatile, but one Bitcoin is one Bitcoin. So they made that point. Gold's 2%, so only 50% left of buying power after 20 years versus Bitcoin, which is way more value. Okay, they're making the point for having Bitcoin bonds or having assets like Bitcoin be able to produce fixed income. Okay, and we aren't going to pay off the debt. That's not realistic. What we can do is grow our assets to get them aligned with the liabilities. Okay, so one of the discussions there is we're not going to be able to pull that lever and get those savings like Doge was looking at. What we can do is we can revalue our assets. And one way to do that is to revalue the price of gold. Now, this is a side conversation I had with this guy, Kevin, really bright guy, very interesting. What he's saying is we can't revalue gold on a whim because it would cause complete chaos in the market because people will get scared that that's signaling something dramatic in terms. I mean, I don't know what the numbers are, but I think the last time we revalued gold was like 60 years ago. So I mean, we could be like at $40 an ounce while we're at over $3,000 an ounce. So we could have all this gold assets that aren't even showing up on our balance sheet. And so one of the arguments can be is maybe we don't lower the debt, but we increase the assets on our balance sheet to kind of wash it out. One of the triggers to be able to do that is to say that, hey, we need to revalue gold so that we could sell some of those assets to then create these bit bonds, or we can buy some Bitcoin, right, as part of the strategic reserve. It's an excuse that wouldn't send the government and the markets into hysteria because we're revaluing gold on a whim. We're doing it for strategic purpose so that we can grow our Bitcoin strategic reserve. That was one of the discussions we had, a little side conversation. I thought that was interesting. We're probably going to come back to that because I think there's merit there. All right, an entertaining one was Peter Schiff and his discussion. So if you don't know Peter Schiff, he's this gold bug who's been around forever, and he's been wrong about Bitcoin like always. He was funny because he did this in a funny, playful manner where he more or less said, hey, you guys are right about Bitcoin. And he's like, I told you guys about it before anybody. And he's like, because he actually it's kind of funny. He had a booth set up there where you just walk up and shake his hand and talk to him. And he made a joke that he's probably the person who is gotten the most people into Bitcoin. Guys walking up to him like, dude, you're the reason I got into Bitcoin because I watched you in arguments totally bomb, and you made me want to go out there and buy Bitcoin, which is pretty funny. So he kind of brought that up. The guy he was having a discussion with said, hey, nothing has intrinsic value. Because everybody talks about, oh, gold's got intrinsic value, Bitcoin doesn't. And the answer is nothing has intrinsic value. As humans, we assign value, okay? So that's your answer there. Health, wealth, and sunshine. I'll show you that one real quick. Health, wealth, and sunshine. Okay, so in sunlight. There you go. This one was fine. This Andy Schoonover, I didn't know anything about this guy, and then I watched him. So Crowd Health is a health sharing program. So this is good for people who don't have traditional access to health insurance, which is very expensive. So when I had a corporate job, obviously I had insurance through work. But when I went full-time entrepreneur to be an entrepreneur, going through like the healthcare.gov stuff was crazy expensive. I mean, if you, depending on your income levels, I mean, it could be nothing if your income's low enough. But otherwise, it's crazy expensive to get that, and it's not really the best insurance anyways. So I use health share programs, which is very popular for entrepreneurs. Now this one is, again, it's a health share program, but he's a true Bitcoiner and it's for Bitcoiners. I thought this was interesting. I think it's worth taking a look if you're looking at health share programs. There's not a ton of options out there, and a lot of them are faith-based. And this one is just like, it's for Bitcoiners. So that was kind of cool. This Paul Keating guy, I've seen him speak before with Primal. Primal's a pretty cool app where you can, it's kind of like the Twitter, but it's decentralized. Anyway, here's what they said. I love the idea of in Costa Rica, the Bitcoin jungle. That got talked about a bunch. I think that'd be a really cool place to visit sometime. They talk about a way to orange pill people, and that's just give BTC as a gift for birthdays or whatever, or the holidays. And it's gotten to the point at first, people are like, well, I don't want this, don't give me this. And then now they're like, hey, dude, can you give me, for Christmas, am I getting some more Bitcoin? Because people have seen how it's performed over the years, and they get excited and they ask. So I thought that was kind of a clever thing. This was more of a mindset thing, and somebody mentioned that every dollar, not in fiat, so that you change, so you earn a fiat, you turn it into Bitcoin, it's actually a +2, not a plus. So here, I don't know how to explain it. So every dollar you put into Bitcoin is a dollar removed from the fiat system, and then is a +1 for Bitcoin. So it's actually a net 2 in the favor of Bitcoin, because it's -1 fiat, +1 Bitcoin, whatever. It was an interesting little mind experience for that one. Okay, next one I'll hit on is Tether and Cantor. Fitzgerald. To be honest, I was disappointed with this one almost entirely. I thought Tether's awesome company. Cantor Fitzgerald's interesting. It was the founder of Tether, Paolo, and then Howard Lutnick's son, just talking about how they're great buddies in the founding of their companies. And then they briefly mentioned, hey, we got this 21 Capital thing. That one, I can't. I'm not going to encourage you to go listen to that one, because there weren't a ton of nuggets out of that one. It's fun to see those guys, but they were just being buds up there, and not really a ton of value came out of it. All right, Jeff Park, he did a few of these, I think. Yeah, with the Dylan LeClaire. This one I would probably say go check out. Let me do this. How institutions get Bitcoin yield. I want to see if this one is up on the old YouTubes, because I'm going to recommend this one. This is in one of the side rooms, so I don't see it right now. Anyway, the reason I bring this one up is, so Dylan LeClaire is the director of Bitcoin strategy for Metaplanet. Metaplanet being the #1 performing stock in the world. It outperformed, Bitcoin outperformed MSTR. It's out of Japan, okay? So this is a wild statement. I had to write it down. I kind of want to double check this. Is that Dylan LeClaire said they've got a business model where they're doubling their Bitcoin per share every 90 days. It's almost too good to believe, worth looking into. But if that's the fact, I mean, that's kind of wild. The other thing is everybody kept harping on and bringing up volatility is absolutely crucial to these types of funds. And overall, volatility is energy, and you have to have energy behind these things. People get scared of volatility. Risk is the potential of complete loss of capital. Volatility just means the number can go up and down quickly. Two totally different things, okay? They want the volatility. What's also really cool about this got technical, but in a very interesting way. Again, why I would recommend checking this one out is that they operate in 3 different markets. So they're in the Japanese market, they're in the Europe market, and then they're in the US. I think they're in the US market. So they actually trade 20 hours a day, which then plays into this volatility thing. The beautiful thing with Bitcoin is you can trade it 24/7. What's ridiculous and antiquated is that the traditional stock market and equities market, you can only trade from, what is it, 9 a.m. to 4:30 p.m. Central or Eastern. It's a joke. Like this, it's complete garbage. It's closed on any holidays. It's closed on the weekends. It's complete absolute garbage. And what's interesting is that you can play the markets because you can look in one market, you can see how it's performing. These aren't futures markets. These are straight up market is open. And then you can go in and you can place your investments, your bets. You can do whatever you want. Very interesting manner. So another one that's fascinating is how they've been able to, Metaplan has been able to structure their debt structure. And actually, no, this I believe was Shirish with strategy. He said if Bitcoin goes down, maybe this is Dylan Clare. Either way, look it up. If Bitcoin goes down by 80% over 5 years, they can still pay their investors. Okay, again, let there be volatility because we're not talking about a complete risk of capital. We're talking about number go up, number go down very quickly. We're not talking about number go to zero. That's the point they're making. Here's the catch. If Bitcoin volatility goes to zero, then these companies are in trouble because they're getting a tremendous amount of value and benefit from volatility. So that's a new metric that's worth checking out for these assets. Okay. The True North one. Here's the thing. So I had a nice little, so Punter Jeff, there we go, Walton. I don't know why it says salt on there. Should just be Jeff Walton. Oh, because grain of salt's in there. Okay, so Jeff Walton, awesome guy. I had a nice little discussion with him at that Bitcoin event. But here's the thing. These guys are absolutely loved, True North, man, and rightfully so. So it is Jeff Walton and Ben Workman. These guys are absolute rock stars. This was the only session, and I would for sure check this one out if it's on YouTube, because hey, let's just see if Punter Jeff shows up. Yeah, I don't know. All right, maybe that's worth looking into, see if it's there. Anyways, so with this one, what was so cool is this was the only session out of all of them. They literally, it was packed. It was at capacity. They shut the doors. I didn't actually get in right away. I left the session 10 minutes early, waited in line, and I still didn't get in. Eventually, there was one in, one out, and I eventually got in there. And it was wild because that was the only session of all of the sessions that was completely jam-packed because of fire codes. They literally couldn't let people in. That tells you something about the conviction and interest in MSTR. No other session had that, okay? And all it made me want to do was buy more MSTR. There you go. So what they're talking about is that it's likely that Bitcoin, this is going to be MS with strategy. They have FASB, right? And so they've actually been showing losses pretty much every single quarterly earnings. And here's okay, I'm going to go through this one by one. So they're about to be able to join the NASDAQ, and they will be the second largest company ever to join the NASDAQ, only behind Tesla. Tells you something, right? They're in good company with Tesla. There's a big misunderstanding and potential huge repricing because up until today, they've only shown negative earnings on their earnings call. And when they goes to FASB, because they have not chosen to go there yet, if they go there coming up, they're going to show such a wild and huge and unbelievable earnings. People are going to be just left with their mouths dropped wide open. How did we not see this coming? Who is this company? It is just going to be absolutely undeniably unreal. That was the message that came out about that, right? So there's going to be a crazy repricing when they go about this. Um, yeah, there's competition. Sailor's encouraging people to do what they're doing, but the new entrants are none of them are as mature as strategy. Um, and the other thing that they mentioned that's kind of cool about this is you'll be able to create a portfolio based on your unique needs, your unique interests, because strategies are going to offer a lot of different products, but they're not going to offer an infinite amount. Well, in order to compete and have something unique, there's going to be copycats, but they're going to come up with different products that might make the most sense for your portfolio. So he's not opposing any of it because all it does is just help Bitcoin overall go up through this adoption. And they're just saying, hey, you're now going to have a lot more options to build out a really interesting portfolio. The other thing that they may mention, which is the truth, is that we still don't know the risk with these companies. They're brand new. This is a brand new type of business model that's never been tested before, okay, until recently, since 2020, and that's still extremely new. That's the thing. There's not really a risk with these companies because if you believe in Bitcoin, Bitcoin will perform. The risk comes from we've never seen a company structured like this. So we don't even know what the potential risks are for having company structure like that. I thought that was kind of interesting. It's a little nuanced, right? Is like we understand Bitcoin, but we don't understand these companies. These companies are a derivative of Bitcoin, but we don't understand the risks here. They reiterated no one is going to catch strategy. There's zero chance that anybody can catch them. They're going to be the biggest. They're going to likely be the largest market cap company in the world, right? And here's the thing. People also talked about, they asked really good questions, like really, really good questions. And one of them was talking about the proof of reserves and what their thoughts were if MicroStrategy should do that. Everybody kind of said, no, it's not in their best interest. It doesn't do anything beneficial for them. They are being audited by KPMG, and so we trust that KPMG is doing the proper audits to make sure that they have proof of funds. But should it be published? They kind of said no. And here's the thing. When you're the biggest, people are always watching you with a microscope. And so this makes them not worried about the Bitcoin proof of funds, because if they did something wrong, somebody would find out, somebody would expose them. Everybody is looking under the covers. Everybody's got the microscope to these guys. So why would they do anything to disrupt the trust in the marketplace? That was their point. I thought that one was worth checking out. If you can find it, I'd give it a watch. Okay. GameStop was interesting. This was more just like really, it wasn't even tin hat stuff because it was all like legit, but it was right after the session, and it was just, it opened my eyes to how the actual marketplace operates, because there's things I had no idea about at all. And so let me see if I got any notes here. So there's this DTTC. I might even be saying it wrong, but I guess they own and operate every possible trade, like 87 trillion in value of these trades. It all goes through the same trading warehouse, something weird like that. And so there's some shady stuff that could be going on. I don't know. I don't know what to talk to on this one. If you can hear these guys speak, the Peruvian Bull was good. Ian Carroll was good. Ben Wehrman was good. My takeaway is stock market can get real complicated, some real crazy stuff. Educate yourself. There you go. All right. Lynn Alden, I mean, I'm sure 100% positive her speech will be up there. Lynn Alden on Bitcoin conference. There you go, right here. Nothing stops this train. All right. Whoops.
Using the right
So,
weight
anyways, that
matters.
one for sure I knew. That was the main stage, so that made sense. So, my takeaways were this one is crucial, is that social security will be dead, done. Ponzi scheme fully drained by 2035. That's her point, okay? And so the problem is they invested that money in US treasuries, okay? Which is not performing relative to the point, the state of inflation. These numbers are off by 1 year plus or 1 year minus. So 2035, 10 years from now, is when things get real nasty. And what her point is that the total debt never went down since the 1960s. Okay, we're at 50 to 1 leverage. The last time we went through this was 1940s. Okay, what her point is that the long term we will have a 7% debt growth. Okay, that's substantial. That's a hard number to outrun. The math simply states that this is a Ponzi, and we have the next 10 years to figure this out, and Bitcoin's going to be a potential way. I would give it a listen to. I'm not going to do what she wrote, what she did in Justice. She had some pretty good charts in there. I think it's worth taking that one a look. So, as you can see, I've recommended a few sessions to check out, but obviously not all of them. All right, Jack Mallers. Absolutely love Jack Mallers. He's such an entertaining dude, right? So he did a really good job. Like, eventually he pitched their strike product, but his lead up to it was awesome. Okay, it was good. It was really good. So right here, I would check this one out. So he started by comparing Bitcoin to other assets and money. I love when he uses this simple example. How much of the money that only goes down do you want? How much of the money that only goes up do you want? Pretty simple stuff, right? Really, his whole thing was about the hodler's dilemma, which is an interesting topic and one that I've put thought about, and that comes up is like, okay, so you're hodling money, you're making money. Let's say you've got $1 million of Bitcoin. Let's say you got $10 million. Let's say you have $100 million. What do you do with it? If you say you're not going to sell, what do you do with the Bitcoin? You got to pay the bills. Got to have a place to live. You got to have a car. You got to have food to eat. And so you could sell a little bit of your Bitcoin to do that. Or what he's talking about is their strike product. And his whole thing of like, well, Bitcoin doesn't have cash flow, blah, blah, blah. His point is there's always cash flow. You just create it by selling small chunks of it. Yeah, you can't sell the fourth bedroom in an apartment building, but you can sell a little bit of Bitcoin, right? Yeah, you're getting some cash flow from the building itself, but you can get cash flow simply by selling Bitcoin. So that's an idea that I need to get more comfortable with. And the thing is, if you become a Bitcoin maxi, you only have one choice. Is to sell, or is it to buy a product like MSTY, which is selling on your behalf, right? To generate yield. So his point was nobody hodls. At some point you're going to sell. But just like people back in the day, if their kids went to college and they owned a bunch of real estate, they didn't sell the real estate, they took loans out against it. And what he's saying is you're going to be able to borrow against scarce assets. This is a timeless endeavor. That's always happened. And you're going to have those opportunities coming up, right? So can we generate cash by still owning it? And his answer is yes. The future of Bitcoin is lending now. Study strike. So his whole thing was they're going to have proof of funds. There's no rehypothecation of your Bitcoin. So it's your Bitcoin, right? It's kind of like in a escrow fund. It's yours, and they're going to offer lending products at 9 to 13%. This is something I plan on making a video to show in more detail. This one is worth. Jack is super entertaining in this discussion. He's funny. He's educational. And he's offering a product. I want to see this thing get more mature, but it's a really good way to kind of do the buy, borrow, die strategy if you're familiar with that. Okay, so let me go here again. So then I kind of just stopped taking notes because two reasons. One, with the last, the session with Michael Saylor is he had 21 actions to take. Well, all of his actions are right there. You can watch his videos. It was worth. So let's just say Michael Saylor about Bitcoin. Let's go Bitcoin 2025. I didn't take notes on this one just because I was, I want to pay attention in greater detail. And the main reason is 21 Ways to Wealth is he literally had these listed out. Okay. So that's why you can kind of just look at his list of those 21 things. What was interesting is I got clued in that he was talking primarily, he kept it general enough that it could apply to anybody, but a lot of this I feel like was dedicated or more pointed in his examples towards institutions and further encouraging them to get in. Of course, that's not anything new for Saylor, right? He's the number one cheerleader or spokesperson for getting institutional adoption, but he also speaks a lot to personal sovereignty. And this one, I felt like this one was a little twinge more towards that institutional adoption. So anyways, a lot of these you can check out. If I'm going to click here on Bitcoin Magazine, this could be a
Why is Amazon paying me $600?
I'm going to go to videos here, and you can see a bunch of these keynotes are up there. I don't see any of the side stages. So this one was entertaining with Max and Stacy. They were just hilarious. El Salvador being the next, or Panama being the next Salvador. That was an interesting one. So here's what I'm going to do. I'm going to leave you with this. I'm going to just quickly go through this list. I'm going to call out the sessions that I think are worth your time to check out. Okay, so let's start here at the bottom and work our way up. The Trump ones, those were pretty good. It was just interesting to hear those guys. Oh, I'm sorry, this is the one. Eric and Donald. That was an interesting one. That might be worth checking out. They don't get into a ton of detail, but it's good to get their philosophy and understanding of how they operate, how they think. I'm just going to go through, probably a lot of these are worth checking out, but I'm just going to share the ones that I listen to that I think are worth your time. This Peter Schiff one, this is more for entertainment. I don't think you need to spend the 26 minutes there. I would spend the 15 minutes listening to Arthur Hayes. I think he's got some really interesting points about macroeconomics that are going to be good. Adam Back, I don't know if I made it to that session, but he's always interesting. If you want to be, again, entertained, this one was entertaining. I don't think I would put it in the top 3 to check out, but it's entertainment. So Arthur Hayes, obviously, for sure, check out 21 Ways with Saylor. Lynn Alden had some really good slides, and I think just knowing the Social Security angle, and that we got a really 10 years is going to be an interesting time for Bitcoins worth checking out. And then Jack Mallers is just awesome. Really good guy to listen to. So there you go. My encouragement is check out the Bitcoin conference. I encourage you to check it out next year if you can. It's going to be in Vegas again. I think it'll be in Vegas for here on out because Vegas is pretty much the only venue around that can house all of 35,000 plus attendees. April 27th through 29th at the Venetian where it was this year. So like and subscribe below. Why don't you leave me some comments and thoughts if there's any of those sessions you want me to dig deeper in or really do a deep dive on a certain topic. If you watch any of them, feel free to ask any questions. Let me know your thoughts and what some upcoming videos you'd like to see. Thank you again. Keep stacking those stats, stay sovereign, and enjoy.